K. Natarajan, ED and COO at Galaxy Surfactants, now joins in on the show. Thank you so much, Mr. Natarajan, for taking time out. You've been very cautious in terms of the outlook for FY23 with regards to, the impact on inflation, supply chain challenges as well. What's the on-ground situation like, and when do you believe that things will normalize and stabilize?
Thank you. Thank you for having me on the show. So the reason we've been cautious is, we've had a situation where this year, say since the beginning of the calendar year, there has been a demand issue as well due to the very significant high commodity prices, and many of our customers have started passing on the increases after absorbing it for a long time. So that's one of the reasons why we were a bit cautious, because till the last year it was more in terms of managing the supply side constraints, but this year we also have the demand side constraints to be managed along with the supply side constraints. The supply side constraints don't seem to be getting any better. It's certainly better than what it was, say, 6 months back, but not anywhere near to what it should be in terms of easing our operations. We do expect that things should start getting better, say, in the second of this calendar year, with the good monsoons in India that are predicted, with the disposable income in the hands of the rural population getting much better. And the commodity prices, there seems to be some news indicating that things should start cooling down. So all this augur well for things getting much better, from S2 of this calendar year onwards.
So, Mr. Natarajan, going by what you're saying, that things are likely to then get better, do you think that your margins from the current levels that you're operating at, which is close to 13.8%, will in the next quarter itself recover? And if you could just walk us through or quantify it for us in terms of what exactly has been the raw material inflationary impact on your margins?
See, one of the things that I'd like to probably correct is the margin percentages which you're looking at essentially are not what we guide the market to. We actually guide the market to in terms of EBITDA per metric ton. The reason being that, the raw material price increases that have been very significant, obviously do not start reflecting into the EBITDA at all. So what we look at is the EBITDA per metric ton, which we have guided the market to a range of 16,000 to 18,000 rupees per metric ton. We ended the last year, financial year, with an EBITDA of close to about 17,000. And we expect that the current financial year will be closer to the top end of the guided range of 16,000 to 18,000 rupees per metric ton.
Sure, that's quite interesting to note. What I also wanted to understand was, when it comes to demand cutbacks, the down trading in AMET, which has adversely impacted your performance. So wanted to understand what kind of volumes are you now then penciling in for the next quarter, and have we seen any improvement at all?
See, if you see it, except for the last year, we've been always growing our volumes in the zone of about 6 to 8%, more on the top end of the range. It was only last year that we ended the year with flat volumes, more so because of the significant reduction in the volumes that we saw in the Africa, Middle East, Turkey market, given the significant challenges they have had in terms of the currency depreciation. And that India business volumes grew by almost 3%. So what we do expect, given that the price increases that have happened to the end products over the last 3 months, we would probably wait till the end of this quarter to be able to get a better picture as to what do we see as the range of volume growth that we will have this year. Because things today are pretty, fuzzy. And we would probably want to wait till the month of June to be able to give some guidance on what the volume growth for this year would be. We do hope that we are able to get back, to our range of 6 to 8%, with things getting normalized on the commodity inflation front and the supply side concerns also, which will start easing out, because that's been exacerbated by the China lockdown, and that's started the sort of very nascent recovery that was there in terms of the logistics scenario. Did get impacted significantly again when China announced a very strict lockdown. So things are, getting back to normal. We do see things getting better on the logistics scenario by in the coming month, and the demand side also will have better clarity probably by when we do talk about our results for the first quarter of this financial year.
Also, I understand that you've commenced a new specialty plant as well. What kind of incremental revenue growth potential can we expect from this? And also then, what is your capex outlay for the entire fiscal?
Yeah, see, the specialty care ingredients, essentially the expansion that has happened has been on the segments of non-toxic preservatives and also mild surfactants, essentially, which are very much in line with the sort of consumer trends that we are seeing. Consumers are getting pretty concerned about what sort of ingredients that go into the formulations that they use. So this really has come in timely, although it got delayed significantly because of COVID. We do see these are all volumes are low, but they are higher margin products, and we do see a good traction happening. And they should start. They started reflecting in our Q4 last financial, performance as well. And we do expect this trend to continue. As regards the capex outlay that we're looking at, typically we'd be looking at about 150 crores of capex outlay in the current financial year.
Good morning. This is Natarajan joining in on the conversation as well. So now with the commencement of the specialty plant as well, any guidance that you can give us when it comes to revenues? Should the market still expect this 16 to 18,000 crores?
Yeah, obviously, we certainly would be looking at touching the higher end of the 16 to 18,000 rupees per metric ton EBITDA band. And we do see things getting better as we progress in this year. And as of now, yeah, we're pretty confident about touching the higher end of the 16 to 18,000 rupees per metric ton band.
Okay, let's leave it at that for today. Thank you so much for joining us.